Hello and welcome to today's ATAS webinar. Thank you for joining us on YouTube. We are pleased to present Fabio Ruggeri, CEO and co-founder of MentorQ, who will be discussing why flow of the options order is key for futures traders. For those interested in exploring the ATAS platform, a free trial is available through the link in the description below. Without further delay, I will turn it over to Fabio.
Thank you. Thank you for having me, and nice to be here. So I'll just basically give a brief introduction about me, and then we can also go into the slide, and then we're also going to show you guys the ATAS indicators with our option levels directly on the ATAS platform. So my name is Fabio, and I'm the founder of MentorQ. I started my career in finance back in 2007. I worked for Bloomberg, studied in London, moved to the US in 2014. So I was at Bloomberg for about 11 years. I had the good opportunity to be working with the largest asset managers, hedge funds in the world, and I basically saw what was happening in the finance space. And then in 2018, I moved to an alternative data company where we were selling data to large hedge funds. So I really saw the shift in basically the different approach from traditional data to alternative data, and our data is now very, very important. So what we're going to discuss today is really why, as a futures trader, it's important to not only look at the price action that you see on the chart, but also adapt your strategy, because now the option market is really driving sometimes the liquidity. So I don't know if we can have the slides on the stream. All right. So here, what is important to understand is that options are really driving sometimes the liquidity in the market, and the reason is very, very simple. And they impact not only obviously the option market, but they also impact the future, the stock market, and the crypto market. And it's very important to understand as a future trader why this happens, because of dealer hedging, right? So market makers that are much more relevant in the option market compared to the equity market, for example, are hedging large option positioning using the underlying, and most likely they would use also futures. So basically, by hedging large option flow, they create a future flow. So sometimes, and we're going to go into some example of some of the moves that we also saw today on a few of the future that we're looking at. When we have a lot of option activity, this is when we also see fast moving markets. So we're going to talk about gamma. We're going to talk about delta hedging a lot in this session. So if you guys have any questions, please let me know. But basically, when we see high gamma in the market, we are in a fast moving market. When we see low gamma in the market, we are in a calm and stable condition. So what this table shows you is if I'm an investor and I buy a call, on the other side of the transactions, most likely we're going to see a market maker. The market maker is going to be short a call, and in order to stay covered, because the market maker is not making money from direction, is making money from the bid-ask spread between what they pay, what we buy, and what we pay for our option. They're going to be on the other side, so they're going to be short call. So in order to stay hedged, they need to start buying underlying based on the option delta that we have on our option, right? So that buying and selling pressure that you see in this slide is what creates a lot of liquidity in the market. So it's really important to understand that basically, if we have a lot of large option positions, then suddenly on the other side, we're going to see a lot of activity on the underlying asset because of the way market makers and dealers are hedging. So very, very important. So a lot of traders, they look at the chart, they look at price action, they look at technical indicators, but what the option market tells you is where the smart money is positioned and how market makers are hedging. So especially if you look, we're going to look into basically also zero DTEs options. Those tend to move the market very fast, and we see some example from today as well. If we go in the next slide, why are options key and why are they important? First, options are forward-looking, so they reflect the market expectation of future price action. They can also provide us with key price levels on our charts where basically investors are targeting, where they think the price could go, and these price levels can act as our risk sentiment indicators. They can act as our target price, they can act as our support and resistance level, and they can also act as stop loss level. So very, very important. Why are option key, especially now? So what you see here is a chart with the average daily option volume for the past 20 years. So the trend really started emerging during COVID, and that's also why we started developing some of these tools that we're going to show you today. Because as you can see, from 2020 to now 2024, option volumes are now like really impacting the liquidity. We see like the trend is not stopping. 2024 was actually the year with the largest option volume, and 2025 is actually been very, very strong. In February, during the tariff announcement, we saw on a given day the largest zero DTEs flow that was ever recorded. So very, very important understanding how the impact can affect also the future market. A little bit about what we do, and then we're going to go into the different levels, and then we're going to show you the indicator. We basically create quant models that look at complex data sets, in particular the option market, to potentially decode and understand key price levels. So we provide our users with our gamma levels. We're going to show them to you today. We have different levels. We have blind spots, which are looking at hidden areas in the chart that can potentially have a reaction. And then, of course, if you're a swing trader, you can also look at our swing trading model for more like longer term trading strategies, 5, 20 days in the futures, and so on. We also provide integration. So we are integrated with the ATAS platform. We're going to show you the indicator today. So if you guys are using already, you can actually use the levels directly on your chart, directly on ATAS. Very, very nice. And it's integrated via API. We cover about 1,300 assets between stocks, ETFs, indices, and futures. We are one of the few companies, if not the only company, that provides gamma levels on futures by looking at futures options. And then we also have levels on Forex. And this week, we actually launched our crypto levels. So we can actually provide levels on Bitcoin, Ethereum, Solana, and all the other coins. We also have intraday levels. So we update our intraday models 14 times per day. This is done on stocks, ETFs, and indices. So I'm going to show you also how you can potentially leverage the intraday levels on futures chart when we go into the indicator. The levels, and we're going to go through the levels and why are they important. So we divide our levels into primary levels and secondary levels. And we're going to go into each one of them in a very short moment. But it's very, very important that we understand what our core resistance means, what our put support means, and we're going to talk about gamma flip level. Why is that relevant as a future trader? And then, of course, zero DTEs levels as well. On top of that, we also calculate what we call our one-day expected move indicator, and that's very important for traders because when you go into the day, it's very important that you understand not only how much money you can make, but also how much money you can lose based on volatility for the day. And then the secondary level are really our JAX level, looking at gamma exposure and so on. So when we start with our core resistance level, our core resistance level is very, very important because is the strike price with the highest net call gamma exposure. And why is gamma exposure important? Because gamma is the second derivative of delta, and it tells us how fast delta moves. And if delta moves very fast, then that means that market makers need to hedge more aggressively. So when we have a very high gamma exposure at certain strike prices, that means that the hedging activity, if the price comes to that level, is going to be very, very high. And again, that's going to impact your price actions as a futures trader, because the price could actually be very volatile and could move very, very fast. So what you see, this is one of our charts. We're looking at an NQ chart. It's a chart from a few months ago, but the important part is really that we can see at this level we have the highest net call gamma, which is the green histogram bar, and that basically defines our core resistance level. So what happens when the market comes to that level? So why is that very, very important? Because we typically see two types of scenarios, right? And as a future trader, this is going to be very relevant. We're going to show you some example in the chart looking at today's price action. But one scenario is really a rejection or a pullback. So the level often acts as a strong resistance, not just technically, so it's not just a technical resistance looking at past price action, but it's actually a structural resistance, because this is where a large number of investors hold call positions and where the market makers are heavily hedged. So as price comes to these levels, dealers start selling the underlying to stay delta hedge, and this selling pressure can cause the price to kind of move back and stall around that level, as you can see in this chart. Also, a lot of investors might start to take profits on the call option that they had, and which also triggers an additional dealers hedging, and they are unwinding their long hedges, adding more like downside pressure. But sometimes the core resistance can actually become an inflection point. So I don't know if you guys remember the case of GameStop back in 2021. Everybody was buying in the money call options, and they were not selling. So the market makers were forced to buy more underlying, forcing the price to skyrocket to the upside. So whenever the market is very, very strong and very, very bullish, then a lot of investors might decide to roll their options position to higher strikes, and that can fuel also a very, very strong upward movement in the price. So the core resistance can become, in this case, an inflection point, similar to when you break a resistance level. Looking at technical analysis, again, we can think about our core resistance in the same way, but this is fueled by the dealers hedging activity and basically the option flow that we see. On the other side, to the downside, we have the put support level, which is really the highest net put gamma exposure. So you see it by looking at the widest red bar. And basically, what that means is that this is the level where we see the highest net put gamma exposure. So where dealers are heavily hedged at this level, there's a lot of investor positioning at this level. And again, once the price comes to the downside and comes to this level, we can see basically two scenarios again unfolding at this level as well, which is really the reason why we call it put support, because we can potentially see a bounce to the upside. And the reason is that the dealers were heavily short due to a lot of put hedging at this level. And as price drops and goes deeper in the money, the dealers are short in the underlying at this level. But when the investors start to monetize those puts, then the dealers do not need to hedge anymore. So they release those hedges, and you see a lot of kind of bounce back to the other side, right? So this is kind of what could happen at that level. But again, also, if the market is really, really bearish and basically the participants are rolling down their hedges, then that means that we see a strong price action to the downside, which again is fueled by an increase in option activity and dealers hedging, right? So this is very important. So why is this important for futures traders? Because the put support level help you understand where the downside might slow or reverse, and also where it could bounce temporarily as the new hedging comes in. And basically monitoring this level can give you an idea where the dealers are positioned. And again, this could impact the future flow and the liquidity that you see in the market. So those are the two levels from the upside to the downside. We also have another very important level, which is called the high volatility level, or HVL. And this is one of the most important level in our model. And this can be defined as a transition zone So it's basically the level where we see and typically referred as the gamma flip level. That means that is the level where we are going from a positive gamma regime to a negative gamma regime. And basically, we're going to show you why this is important in the next slide. But basically, this is where the gamma curve changes from positive to negative. And why is it important? Because that can dictate how the flow can go and how market makers might need to hedge at that level. So if we go into the next slide, this is a very, very important concept. So the gamma of an option can be positive or can be negative. If we are buying more options, so if the market is buying more options or the participants are buying more options than selling, we are in a long gamma condition. So the market is overall long options. When we are in a long gamma condition or positive gamma, the market makers are hedging by buying when the price goes down and going short when the price goes up. This kind of like way of hedging helps us keep volatility low and helps us stabilize the market. We typically see like the price fluctuating very smoothly, and we don't really see a lot of like strong movement. On the other hand, when we are in a negative gamma environment, that means that the market is selling more option than buying. And on the other hand, when we do that, the market makers also need to hedge differently. So they short when the price goes down and they go long when the price goes up. As a result, the volatility during a negative gamma condition is very high, because when we are going down, market makers are actually inflecting the liquidity, they're adding more liquidity, and they're like really fueling the downside move. And when we are in a negative gamma condition, then the volatility is very, very high. Doesn't mean that the price is just going to go down. It means that the price could really swing from different levels very, very fast. So again, as a future trader, knowing when we are in a negative gamma condition or positive gamma condition can really help you adjust your stop losses, your take profits. So for example, if you trade NQ and you normally have a tight stop loss, and you suddenly see that we are going from a positive to a negative gamma condition on NQ, maybe your stop loss is not going to work any longer because you're going to see a lot of volatility. So having a tight stop might actually cause the fact that you're going to potentially lose on the trade. So maybe you want to move to an MNQ, maybe having a wider range and managing the risk in that way as well. So the IVOL level really is a regime change, very, very important. It can help us anticipate volatility shift based on dealer hedging. And again, if we are above the IVOL level, then we can potentially see more like mean reversion setups. If we are below the IVOL level, we might actually see more like trend and breakouts environments. So IVOL level, very, very key. Then we provide zero DTs levels. And why are zero DTs levels key? Because short-dated options, they have a stronger gamma effect than other options because the time to expiration is literally the same day. So they're very sensitive to any price action. So if we are looking at zero DTs and the price kind of like moves in the direction of zero DTs, their delta will react much more stronger than other options because they have a longer expiration. So even like small price changes could actually cause a lot of dealer flow coming in because they need to hedge those positions. So zero DTs level, very, very key. And we also provide those throughout the platform, throughout the levels, and so on. Next is the one-day expected move indicator. This is a statistical tool that we develop, and it's telling you basically how far the market can go to the upside and how far the market can go to the downside by looking at the options activity, and is a forward-looking indicator. Why is this important? Because this can give you great ideas on profit targets, stop loss targets, and can also help you understand if, for example, the stop that you use is relevant based on the volatility of the asset. So going back to what we were saying before, if the expected move on NQ is very, very high, then you might want to have adjust your stop loss accordingly, because we might see a lot of volatility coming in. We have some statistics about it. So here we are looking at the SPX, and we're looking at the 4 years back test. So what this means is that the data that you get today for tomorrow, on 87% of the days, the price closed above the 1-day minimum, and on 85% of the days closed below the 1-day max. So again, when you look at this chart, understanding where these levels are can be very important, because if you are approaching one of these levels, then that could be an interesting setup for maybe a reversion trade, or it could be an interesting setup for take profit target and so on. This is a very good example. This was during the tariff announcement on April 2nd, 2025, right before the announcement in the evening. This was the price action throughout the day. This, I think, believe is NQ, correct? And we moved from 1-day min to 1-day max. So again, you reach the level. This could have been a very, very interesting setup. Even if you don't get in exactly at that level, you would have had some other potential entry, and then your profit target could have been the 1-day max. On the same day, we see the same setup on ES, where we are touching exactly the level. We are going all the way to the top, and that could have been an interesting kind of like trade and risk management for that day. Please let me know if you have any questions. Then we have our secondary levels, which are really, imagine those are like your support and resistance target for the day. They are the, we call them secondary level, but it doesn't mean that they are less important. JAX1 would be the second strongest gamma exposure level, all the way to the JAX10. So JAX1 has stronger gamma exposure, JAX10 as the least stronger out of those 10 levels. Why are they important? Because they will become important reaction areas. So if we break through a primary level and we see secondary level that are still very, very important, those could become reaction area. And then in a second, we are going to show you an example in the chart as well, because today we had a very great reaction zone around one of those JAX levels as well. So this is an example of how you can kind of trade the JAX levels. So a lot of our traders, they typically trade in ranges. They scalp as well. They can scalp those levels, and they use them as targets, reversal areas, or take profits. So those could be very interesting areas that you can see on the chart there. Let me know if you have any question. If not, we can go and look at the ATAS indicator directly on the chart, but let me know if you have any questions. All right, so I'd love to give you guys a demo of the MentorQ ATAS integration right here. So if you are a MentorQ customer and if you are an ATAS customer, you can access this indicator directly on the platform. Very, very easy. We enable yourself for the indicator, and then you'll be able to find it within your indicator list. Let me go through what the indicator does. So this is the indicator that you will find in the list. We are able to plot the levels directly onto the chart. The connection is available through an API. So once you join, you get an API key, and then you'll be able to just plot the level here. You'll be able to customize each of the levels. So like, for example, here, we can change the color. We can define if we want to plot the level or not. And we can kind of like basically look at all the different JAX levels as well. So we can color and customize the level. We can also shorten the name. We can show the level price if we wanted to or not. So there's a lot of customization here. We can set up alerts. So you can actually enable the alerts here. They will pop up right here on your dashboard there. And then basically, then you can come and see what level we want to plot. So we have different levels that we can plot. We're not going to go into all of them. We're going to focus on our gamma levels. So right here, I basically can very immediately plot our gamma levels. I can also plot our blind spot levels. We're gonna not spend time today on that, but basically you can really decide what levels to plot, and then I can filter out some levels. So for example, in this case, I'm filtering out JAX 5 to JAX 10. I don't want to plot those. If I wanted to plot those, I can remove the filter. And as you can see, simply by changing this, they will appear on the chart. All right, so then once they are on a chart, you can actually combine them with your other technical indicators, with the power of the Atlas platform, all the volume analysis that you have. So they are an additional edge that you can have on your chart. If we look at the action from today on NQ, we can quickly see that we broke this level in the morning, and this kind of was the floor, or like the pinning level to the upside, to the downside that we saw throughout the day. And then basically we went all the way up. We broke our core resistance. Again, this became an inflection point all the way to our JAX 2 that then became our kind of like market reaction zone. And then now we are basically pinning down again to our JAX 3 levels here. We cover about 25 different futures. So we cover all the index futures, we cover commodity future, we cover crude oil, gold, copper, we cover the Forex futures, we cover soft commodities, and we also cover rates. So if you trade the bond futures, we also have that. But very, very interesting, if we look at the ES, for example, we can simply change the ticker, and then the levels are automatically plotted here. And as you can see, again, our JAX 5, very strong reaction area, and then basically we're moving down to that level. So the HVL became, again, a very, very important area right here. Let me know, guys, if there's a question I can answer. If not, we can go and look at some use cases as well here in the chart. Another thing that we can do within the indicator is also convert levels. So we can actually convert different type of level from a different asset. Why would we want to do that? So if you trade ES or NQ, very, very important that you also pay attention to what happens on SPX and what happens on QQQ, because the largest option activity is happening at the index or ETF level. So understanding where basically the price action comes from at the index level can be very, very important. So what we've done here is we've added the ability for you to convert levels. So in this case, we are converting QQQ. Let's go back on our NQ chart for a second. And why is this key? Because then having QQQ levels on your chart can actually provide an additional edge. And to do that, I can simply click on our conversion level. And if I wanted to, I can go OK. And as you can see, we now have our QQQ levels right there, that some of them could overlap with our NQ levels, but some of them can actually provide with a very important statistical edge. So let's imagine that we are trading NQ today, and we are approaching a very important gamma level. We also know that at the top here, we have our core resistance, UDTs, and gamma wall on QQQ. So if you, for example, and above that, we also have our one-day max. So if you think, okay, the price is overextending for the day, we see a strong reaction at that level. Let's say we want to start a short trade right there. Where can your stop be, or where can your take profit target be? So here we have clear levels that can tell you, okay, I could take a trade at 23.101, and I could have my risk management using the core resistance or the one-day max, depending on your risk appetite. And then, of course, you have the different gamma levels that could act as support or resistance. So again, here, HVL, we saw the HVL throughout the day was very, very key. Now we have it right here. So having that can be important. Another thing that we can do with the conversion is we can plot our intraday gamma levels. So we can actually have our intraday gamma levels. As we said, we update the gamma levels intraday 14 times per day. Now we can have our QQQ gamma levels directly onto your chart intraday. So this would be the latest level. So as you can see, again, price comes down to this JAX4 QQQ level, intraday level, and then kind of like rejects. So very, very, very important. Yeah, let me know if you have any
Fabio,
feedback. Yeah.
excuse me, there are a few questions in the chat.
Yep.
So I wonder if you can look at it and
Absolutely.
perhaps answer some of them. Thank you.
I cannot see the chat, so I don't know if you want to.
You don't see the chat. You can here
yeah.
in StreamYard, you can click right at the comments, and the window opens.
Okay, yeah. Sorry, I see them. Okay, let
Fine.
me go.
It's okay.
Okay.
That's
So the question from Mate, where do you get the data from? We take the data from the exchanges, so we have data feeds and partnership agreement with the direct market. So it's the data that is the official market data that you see on any of your trading platform. Okay, so then we have a question from Bas. Can you explain how do you choose a priority or weighting asset for trading futures or options as they hedge each other? So within our platform, we have access to different option data. So we can access the option data on the index. So for example, if you look at S&P 500, we have SPX, we have the ETF, so SPY, and we also have the future ES. So you can actually look at the data of all these three assets. And why it's important to look at these three assets is because you need to understand that each asset might move in the same direction, but they have different customers. So the people or the participants that are buying ES are different from the ones that are buying SPY or buying SPX. So for example, in the US, all the 401k plans would be investing in SPY or QQQ. So when they start large option positioning, it might not be because they are bearish on the market, but it might just be that they're willing to protect their profit because they have a longer time horizon. So understanding the customer that is actually trading those assets, very, very important. So for example, SPY would be traded mostly by large institutions that are taking exposure on the longer term horizon on SPX. If you look at ES or SPX, they are most traded by retail traders or by large funds that are hedging using the future. So understanding the ability to have those two option chain on the chart, very, very important. And we can have those via the platform or through the indicator by converting the levels, which is what I showed you there as well. All right, so then we have a question from Dan. Forex does not have options. How are you getting gamma levels? Forex futures does have options. So if you look at the Forex future, they have options for sure. So for example, if we look at 6E or 6A, they do have options on futures, right? So we have access to that. Another question from Am, can I use this for day trading or is more for swing trading? This would be for day trading, correct? So then there's another question. This level work for all indices, also for currency indices. So we have coverage of about 1,300 assets. So I don't know which currency indices you're referring to, but you can potentially convert any levels to any assets. So if you think there's for example, like could be that there's a nice counter ETF that you want to use, then you could potentially convert that into a currency pair for sure. Okay, so then what do you think are the most important levels? So I think we mentioned that. We have our primary levels, which are core resistance, put support, high vol level. Then we have our zero DTs level, and then we have our 1-day max and 1-day min. So those I would say would be the levels that I would always have on my chart. And then on my chart, I also would add JAX 1 to JAX 5 to keep it clean. And then if you are a scalper, you can actually add more JAX levels because you can actually get more like support and resistance area. So for me, like I would say the primary levels are very, very important. And then of course, also our JAX level, we saw it with the NQ today. You know, if you didn't have NQ, if you didn't have JAX 2, you would have missed potentially a good opportunity, not only to take profit, but also to potentially see a reversal. All right, Poi, there's a question, do these levels change during the day? So for futures, we have end of day levels. For stocks, ETFs, and indices, we have intraday levels. They change 14 times per day. If you are trading futures, then you can simply convert the intraday gamma levels directly onto your chart. So this will show you basically the latest update available, and this will change throughout the day. The beauty about the ATAS integration that is done via API, so as the levels update, they will also update on your chart. What time frame? Good questions from Fu. What time frame do you recommend trading with the levels? Really, you can use them on any time frame. The levels are not specifically derived from price action; they are derived from option activity, so they can really be used on any time frame that you want. Another question, is it free for ATAS customers? You need to be a MentorQ subscriber as well. So this indicator is free, but you need to be a subscriber to get access to the indicator. So you will need to subscribe to MentorQ. All right. Okay, we have a question from Dan about the 1-day max and 1-day minimum. When you say the success is about 85%, what do you mean by success? All right, so for us, success means that we provide you the levels today for tomorrow. So we want to look at where the price ends tomorrow. So if tomorrow's price closes above the 1-day minimum that you would have got the day before, then that for us is a success. If the price closes below the 1-day max that you would have got the day before, then for us that counts as a success. So that statistics allows you to understand why it's important, because if you, for example, were to reach this level here, you have a statistical indication that the price could potentially reverse. Again, it's not 100%, it's 85 or 87. So that means that if we are in a very volatile day, it could very be that the price could go above this level, but on normal conditions, that data is very, very relevant. Let me know, Dan, if that answers your questions. Do you have option levels for gold? Yes, we do. So for gold, you can access gamma levels. Let's see. We do have it, not on this contract, so I need to figure out how to change the contract. Yes, we do. Sorry for that. Let me find it. Sorry for that. Let's see. But we do have data on gold. So it's just that it's not directly on the next contract. So I need to find which contract has levels. So let me find it for you. 1 second. But we do have data on gold for sure. We have data on crude oil. We have data on copper. And we have data on natural gas and so on. Let me see. So all right. Okay, GCQ. GC. All right, there we go. Sorry for that. All right. Yeah, let me know, guys, if you have questions on GC. But here, as you can see, basically, there's a couple of questions here. So we are now at this really important high vol level here. And again, look at the 1-day minimum, very, very key. So this could be a level where if you are looking for potential reversal trade, that could have been a really nice area right there. There's a lot of support here. And then you have the 1-day minimum that plays out down there. All right, let me see. All right, we have a lot of questions. That's good. High vol level, why don't you call it gamma flip, is our own methodology. So we decided to call it high volatility level because it defines the change in gamma, and this is our name. So all of these levels are our own proprietary names. So we define those, like that. So yeah, that's the reason why you see HVL instead of typical gamma flip. All right. So are dark pool levels relevant? Do you offer those levels? We don't currently use dark pool. It's something that we will consider in the future. I believe they're relevant. It's also important to understand what's noise and what's an edge. So dark pool levels could also be like delayed. So if you don't have real time dark pool level, they could also be outdated. So like understanding to have the correct data is very relevant, but yes, they are very relevant for sure. We will potentially add those in the future. So again, another question from Dan, going back to the 1-day max. Yeah, I think I mentioned that. Let me know, Dan, if that answer your question. So the success rate means that on 85% of the cases, the price would close below the 1-day max for the next day, not above. Where is the resistance for gold according to the options? So you can see here we have our core resistance, zero ETs, and gamma wall here. We are also, so this area could be very, very interesting. So you might want to look at, like understanding how things could move in this area. We have four very important levels. So we have our high vol level by looking at all expirations. We have our high vol level, zero ETs, and then we have our core resistance level here. And then further up, you have the all expiration core resistance, which is at 3,350, and then our 1-day max, which is right here. All right. There's a good questions about, and I don't know if we can pull up maybe the presentation again, and we can go over that as well. So there's a question about blind spots. I can answer that for sure. All right. So I'm going to show you, and then we actually will have an additional session today about blind spots. If you guys are interested, just follow us, and we are actually talking about blind spots later today at around 1. So blind spots are essentially levels that are derived from cross-asset correlation, volatility regime changes, and options positioning and pressure zone. So basically, the idea behind blind spots is that the world is really correlated, right? So we looked at the levels on SPX, we look at the levels on QQQ, on NQ. So whenever we see those important levels being reached at the index or ETF level, they typically act as a strong reversal area for the future as well. So before we add the futures level, we were just converting our gamma levels from QQQ to NQ, from SPX to ES, and then we kind of like built the direct level as well. But basically, the world is also not only connected by those 3 assets. So if you're trading ES, the world is not only like connected to SPX or SPY. There's other correlations that are very important. So what we do with blind spots is we have created a cross correlation matrix that we look at assets that could potentially affect the asset that you trade in the case of future. And then we look at option positioning, and we calculate those areas in the chart that could become reaction area. So essentially, we look at assets that are correlated to ES or NQ, and then we basically map those areas by looking at the gamma levels of cross-correlated assets and plot them in the chart. So if we, and the idea is really, really simple, because you don't have time to look at all this data. So if, for example, if you're trade NQ, an important level of NVIDIA could actually be a trigger point for a move in NQ, or there's a lot of movement on Tesla. So like, how can Tesla option activity have an impact on SPX or NQ? So having access to a tool that can simplify that data can be very, very important. Also, it can help you have a comprehensive view of the market, where the areas of reaction can be. It can help you with the risk management, and we can show some example on the chart by plotting the blind spots. And then again, we're looking at data. So we're not acting with emotions, we are looking at data. So again, this is another example on how you can use blind spots. They can be used as confirmation. So I would use them in conjunction with the gamma levels. I use them as confirmation areas, as profit targets in the same way, basically. And if we want to go back to the attach indicator, I can show them on the chart as well. All right, so within the indicator, you can plot the blind spot levels here. And again, we can remove any of these levels, and we can simply have the blind spots here in the chart, in the chart, or we can have them in conjunction with our gamma levels. So for example, there was a question about put support 0 ETEs, right? So here you have on GC, you have our put support 0 ETEs. You also have a very important blind spot. And this, again, throughout the day, was kind of like a pinning area where the price moved down, tend to move up, like was spinning around this area. If we go back to NQ, we can also do the same exercise. So we can go back here, and let's look at NQ. Again, like here we have, for example, a clustering of levels. We have JAX1, we have blind spots. So use them in conjunction. Here we have our blind spot 10. So again, if the price is coming down to this area. Not only you have a very important support area coming from the direct level on NQ, but you also have a very important blind spot level right there. To the upside, very, very similar. We have two very important blind spots here. So if the price were to move up towards this area, those could also become very important reaction area. And then we can look at the S. Again, here again, reaction area, blind spot 3 is there. We have our core resistance and blind spot 5. And then here again, if the price were to go back to this area, we also have some very important JAX level, 1D max, and so on. So there's another question. So basically, when the price reach one of the levels, you check in on footprint on how the price react and taking short and long. So yes, I mean, the beauty of this indicator is that you can combine it with all the other like volume analytics that you have through the ATAS platform. So I think it's a great addition. So not only you can access those data that you already have access to, but you can then overlay that with the option data that can tell you where the market can be positioned. And typically, I would treat these levels as a reaction area. So you want to confirm what happens around these levels. So for example, when we came down here, we were in a very strong downtrend, but then suddenly we see a green candle, then the price tries to break, cannot break, and now we are kind of like in a range. So understanding what could happen here could be very, very important. So this could have acted as a very important floor. Let's say that you wanted to enter at this level because you think that the move is overextending and the price will react. You also have some very important potentially stop loss target that you can do by using the gamma level and the option data. Question from Dan: is there an indicator on your system that can predict the ending price for the day? We have the range for the day. We also have swing levels, which is the range for the next 5 and 20 days. Yeah, that's what we have currently. Yes. Let me know if I missed any questions. Sorry. I hope I answered everything. Thank you so much, Dan. Thank you. Thank you, guys. Yeah, and to add to that, again, going back to the slide, options are becoming very key. And basically, this is why there is a lot of edges that you can get by looking at option data as well. The 1 p.m. session is on our YouTube channel. So if you go on our YouTube channel, you can go under our live session and we're going to be streaming there. Is it possible to do back testing to learn how to use those levels? If you access our platform, yes, you can go back up to a year in the past. So you could actually go back and look at the levels from days ago, like months ago. Yeah, so absolutely. And then another thing that we will also be doing is develop an historical API. So within the different platforms within ATAS, you'll be able to also plot historical levels going back in time. So this is part of the development plan as well. Question from Mauricio. It's an external indicator from ATAS. So we have developed the indicator for the ATAS platform. So basically what happens is we will enable the indicator on your ATAS, so you don't have to install anything. You just have to subscribe to MentorQ, and then you get the indicator on your ATAS platform. You just have to provide us with your ATAS email address, and then you see it basically within your indicator list here. So once you're enabled, you will be able to find the MentorQ level under your custom indicator. Is ATAS your platform? I use ATAS. Yes, absolutely. I love the indicator on ATAS because it allows me to plot multiple levels. It's very, very fast. We also have some filtering capabilities here, which are really nice. I have the conversion. I can plot multiple levels. It updates basically as soon as the levels are updated on our system, and then I can customize very easily. So I think the indicator that we have is really, really easy to use, really great. And then I also have the alerts, so I can also receive alerts whenever a level has been hit. So I can enable that, and we can basically see the alerts popping in right there. And to get access to the ATAS indicator, go to our dashboard and look under integrations. On the left-hand side, you will see ATAS as an option, and you will be able to provide us with your email address, and then you get access to the indicator in your account directly. Dan, if you have further questions on the indicator, just send us an email at info@mentorq.com. We can answer there. No problem. The other important part, I don't know if you guys are trading also in the crypto space. We do now have access to our crypto gamma levels. So via the dashboard, we now have, so you guys can access now our crypto data right here. We have our crypto models, our crypto option data, and basically we cover different crypto exchanges from Binance to Deribit to OKX, and and you can come here and look at the different models. So whenever you also get access to MentorQ, you can also access not only the levels, but also all these kind of like nice models that can help you understand how the market moves. We cover futures, indices, ETFs, stocks. And then if you want to look at the integrations, you can just simply come here, go under ATAS, and just send us your request. Within 24 hours, we will enable your account, and you'll be basically active on the platform, similar to what I showed you before. And then if you want to look at end of day, intraday data, you can also come here. We have our end of day models. We have our intraday models. You can see how gamma changes throughout the day. And that can really help you understand also if there is a flow moving throughout the day. So if we go on intraday, for example, we can see basically right here how gamma changes throughout the day. So here we have our 11:30 snapshot. We had our 10:30. So you can see how the kind of gamma changes throughout the day 14 times per day. So very, very interesting because that can be highly correlated with the price action that you see on the charts. Don't know if you guys have other questions, let me know. Premium or Pro. So Premium will give you access to everything we showed you today, all the indicators, the platform. The Pro is on top of that, we have our trading group. So with Pro, you'll get access to the live session. We are live trading about 20 hours per week. So on Pro, you'll get access to the platform plus the live sessions. But Premium gives you access to everything, to the platform, the indicators, the integrations, and everything that we showed you today. And I don't know if the Atas team has any question for me as well that you want me to go through.
I basically don't have any questions, so let's wait for the audience.
Okay.
If they have any other.
Absolutely.
Maybe, Fabio, if you can repeat the conditions. So the users should register at your website with the Atas email.
Yeah.
And then they get the Mentor Q indicator trial version for free.
Yeah. So basically, for us is you would need to be a MentorQ subscriber, right? So as long as you have a subscription active, you can access the indicator. So very, very simple. You can actually, if you go on mentorq.com, we're also running like a nice promo for our launch today. So if you go on our pricing page, let's go over the subscriptions. So the premium subscription will give you access to everything that we do in terms of platform, indicators, integration. The Pro subscription will be just on top of that. You'll also get access to our Pro trading room. So we are live on Zoom every week for about 20 hours a week. So, but the premium gives you access to all of that. So once you subscribe to here, you can then access everything within the dashboard. So you get access to all the data, our crypto intelligence, all our screeners. And then simply you would be able to come to Atas, provide your Atas email, click Save and Connect, and then my team will enable your account. So we have access to the developer section, so we can enable your Atas account here, and then simply you would get an API key. You would copy this into your indicator, and then you'll be able to be live in the market within 24 hours. We typically update that every few hours, but we normally have 24 hours window where you send us the email, you'll get access to the indicator, and then you'll be able to access on Atas. Once you have the indicator, you will find the indicator. So once you're enabled on our side, then you'll find the indicator under your custom indicators. And then you have the MentorQ levels here, and then you would just simply type your API key right here. The API key is the one that you would get from this section of the website, and then the levels will automatically plot for you on Atas. Yeah. Also, I think is important, we also offer support and tutorials. So we have also an academy that you will also get access to. So for those who are interested in learning how to use the data, how to trade futures, how to use options, we have about 500 plus hours of video lessons here. Those are all available as well. So if you are a premium member of MentorQ, you can also unlock all of these. So we have a lot, we have live trading sessions, we have probably about 500 hours plus of data. And then also we have also our financial wiki, so which is our supporting documents. So if you want to learn about gamma levels, everything is here. We talked about core resistance, put support. You come here, you have everything. We have a guide, we have a video. We show you exactly how it works, and then you can come here. But not only that, we also have a lot of different things within our knowledge base. So if you want to learn more about delta hedging, you can come here. If you want to learn more about Forex, risk management, crypto, all of that, it's all available through the guide. And very, very soon, we're also going to integrate AI. So you'll be able to actually use our AI tools to potentially learn and interact with our data. The discount will end on Monday midnight at midnight EST. But if you have issues, just send us an email. Send me an email at info@mentorq.com, and we'll take care of you. No problem. Thank you. And if you guys have any questions about the platform itself, please also let me know. So we have some very interesting use cases on how you can also use our proprietary scoring system that you see here to potentially look at price action and basically how to understand how the market is moving as well. Yeah, and let me know at Atas team if you want me to cover other topics as well, or I don't see any more questions in the audience.
I don't know if the length of the webinar should have been 1 hour. We are already 70 minutes long.
Okay.
So I don't know if
We can, yeah, no worries.
We are okay with that.
Yeah.
If
Yeah, I
yes,
don't know
please.
if, yeah, for anybody who has any questions, I'm not able to paste the comment, but the email that you can use is info@mentorq.com. So you can send us any question that you might have on everything we cover, gamma levels, and yeah, exactly. Thank you.
I just placed the email.
Thank you so much.
You're welcome.
And then, yeah, if you guys wanna join us, we are gonna be talking about blind spots in about 18 minutes. So we are gonna be live on our YouTube channel or on X. So if you're interested in learning more about blind spots, yeah, please join us. We'll be live today in about 18 minutes.
Okay, so in this case, if there are no more questions, guys.
There's one more, Dan. Yes, Dan, if you go to our website, create a free account, and then you can access all the documentation there. So yeah, everything is part of the website, yes. And I really appreciate you guys for having me. We're very excited about this partnership, and yeah, hopefully, if you like, we can do more sessions like this. We'll be happy to join those for sure.
Yeah, I will definitely talk to my colleagues. This was very interesting webinar, in my opinion. So, thank you, Fabio, very much for delivering such an informative presentation on options order flow and its implications for futures trading. We appreciate everyone who participated in today's webinar. Please subscribe to stay informed about upcoming sessions. And if you found this content valuable, we would appreciate your support with a like. Thank you for joining us today, and we look forward to seeing you in future at our Atas channel at YouTube. Thank you very much. Have a very nice day. Bye-bye.